Alright, so we're on YouTube, I think a minute early here to make sure or see if the technical difficulties I had yesterday are fixed. Can anyone check YouTube for me and confirm that I'm on there, and also that I got sound and I'm good? Really? Really? Pat, I trust you, but I want to make sure, looks good, huh? Alright, look at that. You know, maybe if this whole trading thing doesn't work out for me, I got a future as a tech guy. My voice sounds different? That's one of the things we were trying to figure out. Does my voice actually sound different? Because if it does, I might not be connected to the right... Oh, okay. Now Sharir says he was kidding. He's my Batman voice? Ooh, that would just be a deep voice? I've never gotten into the superhero movies too much. Oh my god, those Rivian numbers. Can't talk about them until after we do the disclosure. I still feel like someone's going to come back and say that something's wrong. That's why I haven't started yet. It's 4:10 now, though, so I guess I can. I gotta do the disclosure. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and a member of FINRA SIPC. All my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I don't have that full cool backdrop right now for the YouTube, but we can try to get that going at some point in the future here. Yeah, you know, the position disclosure, I feel like I don't like that position disclosure because you need to know what I'm in, but you got to know my sizing on stuff because I have partially been forced to through stop losses. I've had to size down a lot here as this market's broken down over the course of the last month. So kind of just in smaller feeler positions on some stuff and waiting and watching to see how this market goes here. But I am bigger actually in SoFi from yesterday still. But I'm using that low yesterday as a stop loss for sure. So that one I got size on, and it was green today. So SoFi by far my best name here. Rivian's trading up. Rivian's numbers are absolute joke. Wow, it is trading up from where it closed. Rivian's numbers are an absolute joke. They lost $1.43 per share, which I guess is a beat by 2 cents, on revenue of $95 million, which is a big old miss. They reaffirmed their production forecast. This company is going to take 10 years to become profitable. Though I did, when I was in Salt Lake, I was hanging out with a guy who owned a Rivian. And he drove it to the brewery that I was at. And that was kind of cool. It was actually super cool. I thought the car was awesome, to be totally fair. But the numbers are just atrocious. It's going to take forever for that company to become profitable. Disney trading up. Disney's up here a little bit. Bumble up nicely here after hours. Where's the disaster today? There's been a disaster every day. Somebody's got to point out to me the one that's down 30%. Stefan. You should buy the stock. Where's the one that's down 30%? There's got to be one down 30, 40, 50% because that's an everyday thing. Is Beyond today right now? Oh, there we go. There had to be one. Beyond down 24% right now. Bros, dead. Oh boy, there you go. 38%. Yeah, Unity was yesterday though, right? 37%. I'm gonna put that one in the yesterday category. Unity down 37%. Man, the destruction on some of these stocks is insane. Like absolutely insane. 38% for Bros. We're down 24% and Beyond. Who's buying the dip? The dip buyers are all in their caskets. Oh, man. All right. But with that said, with those negative comments said about where this market is, I think we're getting closer. I said it on Monday, on this day, which actually wasn't too far away, right? Lows on Monday was 405. Now we're at, 394. We're down $12 from there. I said it on Monday that I didn't think that the bottom was in yet, but that I thought we were starting to get closer. NASDAQ's off 28% now at this point. And then I said early this week, which is also turning out to be true, that we got to watch out if we lose Apple and Microsoft. Because I'll tell you what's happening today. Today was a super interesting day. What's going on right now is we had the CPI number that was not great. It was hotter than expectations. I really felt that we could have had a massive rally if the CPI came in down, or maybe even if it came in line. But it came in hot. I guess there's a couple silver linings there, maybe a little bit that Matt was talking about this morning. But even with that, so first we got to show the pre-market price action just because of how absolutely insane today was. Look at this pre-market move. We're at 404 in the SPYs. 406 is huge resistance. Q's 306 is huge resistance. We're at 306 in the Q's this morning. We're up what was this? Like 1.5%, 2% we were up pre-market? And then this is when the CPI number came out. I mean, oh my God. We dropped from above 305 to 295 pretty much instantly. You're looking at a $10 drop in the Q's. From very solidly positive to very solidly negative. A lot of volatility, and then the market opens up, and we traded all the way almost back up. We traded almost all the way back up. And this was mind-blowing to me that the market was able to even go green. And the one thing I did say was, hey guys, maybe in the very low probability situation that this market goes green, that could actually be a telling sign and we could move higher here. But we could see it, right? We could really see it. And the SPYs and IWM were trying to show relative strength. Yeah, we did, Steve. That's exactly what I'm about to talk about. That the SPYs and Qs here were the SPYs and the IWM were trying to show relative strength. I remember really, really watching closely these two candles right here, these two little kind of continuation hammers as they were coming in. There was just a massive battle between buyers and sellers that were coming in. It almost seemed like, we've been talking about how this market has had sellers but has just been devoid of buyers. It almost seemed like, even though we did a lot of volume today, that there were neither buyers nor sellers that were willing to take a stand here at this point. Like the market shouldn't have even been green. But we just couldn't really clear up. And the SPYs and the IWM actually were looking pretty decent today. They weren't moving as well as I wanted them to based on the VIX sell-off. The VIX was getting brutalized here, and the SPYs and the IWM couldn't catch a bid. I'll tell you the problem was these FANG stocks. The Qs, a little bit hard to tell in this chart, but they were relatively weak. They were not participating. Every time they were breaking down first, they were getting down below $300, and we just kept talking about it. All of the FANG stocks were acting really relatively weak to one degree or another, and they got smoked today. Apple down 5%, and you can still see the relative weakness in FANG. Apple's down, the Qs here are down 2.6%. Apple is down 5%. Amazon's down 3%. Facebook's down 4.2%. Netflix is down 6+%. Which one am I missing? Google was actually holding up okay, and Google still actually is okay here at the end of the day. Google closed, relatively flat. Microsoft also just, I remember watching that 266 level intraday, like, oh my God, we can't lose this 266. Microsoft bad. So what I said earlier in this week was, the one thing, like I was starting to think here earlier in the week that maybe we're starting to get closer to the point where this market could stabilize, but that cannot happen if we lose Microsoft and Apple. Microsoft and Apple have been the two stocks that have just been really holding things up, right? We know what happened with Amazon. Facebook has been whatever this quarter, not acting particularly great, but you know, it's still just brutalized from the last quarter. We all know what happened. We all know what happened with Netflix. It's been Microsoft and Apple that were able to trade initially well here, you know, gapping up and, you know, really trying to hold this key 270 support level. And then Apple, same thing, trading, you know, pretty well since the report, really trying to hold this key 150 level, and losing those levels. It just, exactly what Jerry just said, is such a great way to say it. The generals are dying. So you might have all of these other stocks out there that I'm looking at that I'm thinking are starting to hit levels where it's interesting and maybe they can stabilize. But the problem is, these are the companies that everybody owns, is Apple and Microsoft. And when you start losing these, I think it naturally causes there to be selling in pretty much everything else, except maybe, you know, staples and energy. But you pretty much start to see selling that comes from this to everything else. Yeah, for sure. And by the way, not to get off topic, but energy actually has been the one thing here that's just been holding up incredibly well, because, you know, you got to, the one thing that I was worried about when that CPI number came in hot was that the market could really start further pricing in a recession. And I think that, like, a real recession is the only thing that can kill these energy stocks right now. Just because they've been so cheap, they're so favored right now. They caught such a good bid. The price of oil's up so much. You can still make the argument that a lot of them are trading cheap for sure. But if you start really hitting in a recessionary environment, then we could lose energy also. But today we lost to Apple and Microsoft. We kind of already had lost Microsoft, but it was battling back and forth in that area. But we definitely lost Apple today. Apple absolutely smoked, down 5%, and that just led to, I think that's really what caused this market that was trying to hold up early to then totally fail. Is that you just had, even, you know, early on, the SPYs were acting impressively well despite that CPI number that scared the crap out of me. The IWM was also leading here, acting impressively well. Oh yeah, Tesla's down 7.25% today. And the Qs were heavier, and when I'm trying to decide if this market can hold up, and I'm typing up these big FANG names, I'm like, man, this just doesn't look right. You know, the intraday technicals here, when we lost this 196 in Facebook intraday, when we lost this 266 in Microsoft intraday, when Apple, I kept saying I need Apple above 154.50, and there were like a couple fake outs here where it actually started to look a little bit better for like 15 minutes and was ticking above 154. I was like, all right, that's a good start, but I really need this thing to be able to get above 154.50. If Apple can just get above 154.50, I think that this IWM that's looking good, this SPY that's looking good, and this UVXY here that we're looking at, just to get a quick glance of generally what the VIX is doing, I think that all the rest of those, you know, this is going to fall apart, the VIX is going to fall apart, and the SPYs and the IWM are going to be able to catch a bid, and the Qs maybe are going to start to improve. But you just couldn't count on it because they just didn't look right. They never gave you the all clear. You know, it's like we were able to get above some first key levels here for the SPYs and the IWM, and even briefly the Qs. We never even really went after our second key level, which is, you know, 404 to 406 for the SPYs, that whole range. We like ticked the bottom part of that range, and we just we couldn't get the follow through. Apple was trading like garbage almost right away, despite this one big tick. But then once all those things lost those intraday levels on the downside, those intraday support levels, the whole market was really just shot from that point. It's interesting to note a couple of things though. The market here is like starting to get like parabolic to the downside, like Pat's been saying. The thing about down markets though is that it's easier for them to do that than in up markets because fear is a more powerful emotion than greed. It is notable. I also do think it's notable that the VIX was still able to kind of be down today. See, VIX's down 2.5%. It's such a garbage product that I always want to confirm that with the actual VIX. But yeah, the VIX itself closed, if I'm reading this right, at like 32.67, which is down 1%. So that's a divergence. And it's a end of day divergence too, which we haven't seen happen very much, where you have the VIX down with the market down. Yeah, you know, SPYs are down 1.4%, Qs are down 2.7%, IWM is down 2.25%. It's one day so far. The last really notable VIX deviation that I remember was right in here, actually. And this actually led, it was the recognition of the VIX deviating that actually enabled the team to really crush this to the short side. And then we flipped long down here and caught the bid on it. It was starting here. I wish I could just type up the chart of actual VIX to show you guys at the same time. It was starting on the 27th or the 28th that the VIX started going up every day with the SPY. We had like 4 days in a row here with this as the pinnacle day here in the beginning of September, where the VIX and the SPY were up together, and it was very unusual to see that kind of divergence happening that many times in a row. And the market here had basically gone parabolic, which we know that just can't last. You can see how extended we were here on the 2nd, and that was again even as the VIX was also going green, and then that led to this relatively heavy sell-off. We went from 360 to 320, which I know doesn't seem like too much compared to now. And then, you know, we V-bottomed again because of quantitative easing and worked our way right back up. So it's just one day here, but I do think that I think it's notable that the SPYs and the IWM are trying to act as strong as they were today. That the market still finished red along with the VIX being red, and that a lot of that seemed to come from selling that was a result of FANG breaking down. And Apple, Apple's the most important stock on the market, right? The Apple-Amazon combo is almost 20% of the NASDAQ. So it's going to be really hard. It's going to be really hard for SPYs to be green. And then Tesla also, right? Tesla's down, what, almost 8% today? Tesla making that next leg down. It's crazy that Tesla's not even at its February lows yet. But these companies are just such mega cap companies that it's just very hard for really anything else to perform, because we know that the market itself is such an important layer of probability. So you could be looking at something that was trying to be relatively strong today. You could look at something that was basing today, and then there's a good chance that what you're looking at to the long side, you're like, wow, the market's going green. We're trading above, you know, SPY 400. This stock has relative strength. You know, and you get long some stuff there. That's totally the right thought process. But then these things are just such heavily weighted. They were so weak. They eventually weighed on the market enough to cause the market to fail. And then that's going to cause everything else to fail. Just because, again, your correlation is there. You lose Apple and Microsoft, and that's it. That's what we said earlier this week, and that's exactly what happened. Someone call Tim Cook and tell him to turn that buyback button on. So that's it, gang. You know, I actually think that we navigated this sell-off really well today as a team. You know, we recognized that things were starting to not look right kind of in here when we couldn't get that continuation. Really right here, right? Because, first of all, we didn't get the upside continuation that we needed when the market was starting to really hold above 402.50. No momentum came in based on what the VIX was doing. And then when you had this pullback right here at 1050 was just too deep. That should not have been more than a 15-minute correction. Because I remember at this time commenting that if we have this UVIXY actually give a price correction to the upside on like a 15-minute chart, this market that hasn't been able to go despite the VIX selling off, where's that going to end up? And you know, that's exactly what happened. We ended up kind of just having that market failure here. The weakening of the VIX didn't lead to any systematic buying really that was needed. And then we ended up losing the generals, losing the FANG stocks, and then things just got pretty bad, which is to be expected. But on the way down here, you know, we were calling out some good trades, right? We called out this bearish consolidation for a short. We called out first initially here as a long, and then up here as a short. You know, just smaller time frame trades. I was just typing that stuff into the VTF as fast as I could while I was stuck in some meeting. You know, and calling it out with stocks as well, right? Recognizing this apple inside 5 and down. I remember saying that this apple inside 5 and down is shortable along with the kind of break lower of this pivot high here on the market. And then at the same time, we were actually able to kind of pick out, you know, some of these longs, like in here and in here, and talking about the importance of, you know, when you're taking those counter trend trades, get that risk covered, take off more at the ADMA. That ADMA is a target. You know, if you can get a snapback on a move like this to the ADMA, and this is not even a great example because this is almost as much of a time correction as it is a price correction. If you executed this well, which one was it I called out that was super low risk? Was it this buy? It might have been this buy here, like 15 cents risk. Like, you get these snapbacks on these counter trend trades here to the ADMA, and they kind of do what they're supposed to. You should be, by the time you're getting stopped out, because you should be having a not very aggressive game plan because of how counter trend those trades are, you should be getting stopped out and making money on that. But that's why execution is so key. I remember Jay Cools was asking me at one point about getting involved in, I think it was off of this trade, kind of in here, and it's just too late by that point. Yeah, if this gives a big fuller retracement and that retracement becomes a reversal, you're going to make money. I just don't want to count on that. You know, I want to recognize on this candle, as an example, that it's the fourth red bar down, you're getting extension, you're getting this tail, ideally there's volume picking up. I remember my problem I kept saying was, you know, guys, my issue is that the volume is just not big enough on these. But you want to be able to execute so well and so tightly versus this low that you're easily getting your risk covered by the time you get an ADMA touch. Same thing on this one. You know, I remember calling this Q buy out, and if you're fast, I was slightly late on vocalizing it just because of when I saw it. But if you were fast, from when I vocalized it, it was literally 15 cents risk. You know? So you really could have bought like between 293.10 and 293.20 on that. You're getting a move up to 294.10. Trade fails. At the very minimum, you should be break even in that. Based on your kind of counter trend game plan, it's going to be less greedy. You get the risk covered. And then if you get that tickle of the ADMA, or really you should be offered just in front of it, that's enough to take off even a little bit more to make sure that by the time you're getting stopped out, you are being green in it. And that's the counter trend trade. The with trend trade was there too, that we were trying to communicate. I know I called out a couple of these Apple bear flags. I think I called this out as a bearish consolidation in here. This out as like a bear flag. I said this bear flag here, this one didn't give the same degree of follow through and probably would have stopped you out. But you could have taken these trades on both sides, really, depending on kind of what you were looking at, what your portfolio looks like, how you want to manage the risk. It's very hard to do both, though. You know, I'm not gonna what I'm not gonna be able to do. What I'm not gonna be able to do is honestly, even as I called out this long and then I called out this short, I'm not gonna be able to get long here and get short here. I'm not gonna be able to do both. I kind of have to pick a side. What I'm gonna end up doing is I'm gonna take this long, and I'm gonna get risk covered, hopefully more than risk covered, and then I'm gonna look to hold 25% of my position to sell more at the 21 EMA if it gets there, and then hold some for a reversal should the reversal actually happen. What I'm not going to do is go, oh, okay, I'm going to liquidate this position and get short. But the same spot that was a great spot to book profit if anybody took this long was a spot where you kind of could have gone short if you weren't actually long. Really just all two-way trades there. So I was just trying hard to type that stuff into the chat to communicate it. Normally I don't love these midday trades as much, but when the market's moving like this, we got to do a better job, I think, of taking advantage of the short-term day trading opportunity, which is something I've honestly moved away from a little bit. But in this market environment, we probably need to be doing more of it. So that is all I got for you guys today. Another crazy one in the books. Things are getting wild out there. They're getting silly. Let's answer any questions you guys might have. Gabriel, in hindsight, the highs were shortable, given we didn't clear them, and also those were the pre-market highs. I think you're talking about early on in the day. I know Sean did a great job. I think it was Sean. Somebody on the team did a great job actually shorting early. I don't love the short early above support. I don't know. This market never should have went green. If you want my opinion on that, this market never should have went green. So do I want to short in front of this 404 to 406 area off of that? I know the market's really weak, but we just came out with this awful CPI number, and yet we're somehow trading positive. I don't know if I want to jump in on that trade. I'd rather be taking more of what we were talking about after the things broke down to actually be shorting stuff after things broke down. And this, by the way, right here was a very key candle. This negative Maribozu, we tried to hold 400 for the third time, and then we failed and broke on a major negative Maribozu candlestick. This is, yeah, definitely a key candle. So I don't know. I don't love those shorts up here as much. I think that they're very difficult because the market was acting really relatively strong, though we were able to identify some of the underlying problems, and the VIXI was just getting crushed. You easily could have looked back on this move, and it could have been a major upside move. And I still wonder, I still can't help but wonder, we were able to rally as well as we did off the open on that CPI number. What would this afternoon meeting be like if that CPI just could have came in line or God forbid under? I prefer these shorts, these trending shorts here after we've shown that we were breaking down. From Steve here, no, you don't favor trading USO, but don't you think the CPI numbers say high oil prices are here for a good while? I don't know. You know, definitely inflation came in hot, but I don't know how much of that's priced in already at this point. Because honestly, oil really hasn't done too much since it went parabolic in March. It's been consolidating that with this like channel here. It's been doing it with a massive amount of volatility every day, 4 or 5% up or down for oil. But we haven't broken out above 82 in this USO. We haven't broken down below 72 in this USO. And even right now, we're closer to the midpoint than anything. So I'm not sure. I think that there's a case that you can make that at a certain point, if we can't get inflation down, that it becomes bad for oil. Which, the whole way you traditionally bring down inflation is with a recession, right? What's a recession going to do to oil? It's going to bring oil down. You could argue that the oil stocks are still cheap, and that's probably why the oil stocks, in some cases, it seems like the oil stocks are performing better than oil, right? We'll see a lot of times these down oil days, and those oil stocks are still holding up like absolute champions. Helps when you got, what was Stefan saying earlier? Uncle Warren buying 20% of Oxy, and then they're going to probably come back in and buy back 5% of their stock themselves at the same time. So yeah, we'll keep watching this range here for oil to see which way it breaks. From Jackie, can you go over what you saw during the long you called out in SPY and Qs around 145 today? Okay, may have just done that, but let's take a look. Around 145, yeah, here. Thanks for calling that one out. Really early for really tight risk. I took the trade, but I bought on the way up through the pre-market low of 194.33. What are you talking about? 194.33. Is it IWM? No. Oh, 394.33. 394.33. That's on SPYs. I didn't even realize that was the pre-market low actually when I called that out. Do you think that I was too late to this trade? No, not necessarily. 50 cents risk on the way up there is really not too bad at all for the SPYs. You should have anticipated the break and taken it earlier. No, I think that was. I think your execution was good. I think your execution was good. I think because you were also looking at the trade a little bit differently than I was, right? You were looking at the in conjunction with the pre-market action, which those pre-market levels are important for the indices. They're not important for most stocks. That's why I don't keep the pre and post market on my charts during the day, because it's just kind of distracting more than anything else. But knowing the level is actually really important. And I didn't even realize that. I was just trading it based off of the technicals here. It was what I just described earlier. You know, third bar down here for the SPYs. I think it was fourth bar down for the Qs. You got a little bit of an increase in volume. You kind of break in, you know, around a number here, you know, which I do think matters actually when you're trading these things. Buy 394. Q, that 294, you know, really tight. You're breaking them, and then you're buying kind of the snapback on the extension there as the tail's coming in, and you're anticipating that move, and you're looking for the move to the ADMA, and that's why I was saying before, you know, that early execution, having good execution on this stuff is so key, because most likely these trades are going to fail, which these did. But if you executed well, you can still make money in them, let alone if they actually really work. So, good stuff, Jackie. Yeah, Stefan, I think so too. I think we're getting to that point here soon. I'm just I'm waiting for the signal. You know, like I'm looking at these things, and I want to I'll tell you what else. You know, the Nasdaq is one thing, and I think that the Nasdaq is holding up as well as it is because of Apple and those buybacks, obviously. The thing that is interesting to me more than anything is where this IWM is. This IWM at these pre-COVID levels is super interesting to me, and really extended into them. You know, ADMA's at 180. We're extended by $10. It's only a $170 ETF. We're extended by $10 here. 21 EMA's at 188. And this is what, by the way, on a decent CPI number, my game plan today was for us to position ourselves for a move to the 21 EMA on the daily charts for a lot of these stocks and indices. That was the game plan that I was coming into the morning meeting with, before I knew what the CPI was going to be when I was doing my research pre-8:30. I was like, if this CPI number comes in decent, I'm looking for a snapback to this 21 EMA, and then we'll take it from there. And I usually don't want to predict that big of a retracement. I usually just want to predict the retracement to the 80 EMA and then look for continuation. But I think that this IWM is your best representation of kind of your average stock that's out there. It's back to these pre-COVID levels. The thing about this, though, is I'm actually viewing this IWM as a support zone, not 170 specifically, but it's like the area from like 171 down to like 160, like a big area here. So I'm still leaving room for us to have that violent capitulation that we keep kind of talking about. Which that, I think, you know, if we could get like I don't know if I might have a stroke, but if we could get like a violent day here, like tomorrow, where the IWM gets to like how many points was the IWM down today? Do people say points anymore? It was down 3.5 points. You know, if we could get like a day tomorrow where I'm looking at IWM 165, massive volume hit. That was my big problem every time I was trying to call out those like little lows in the SPYs and Qs today. Is the volume just wasn't right. The volume just wasn't right. We're getting to an area where we've retraced back to pretty much 2019 levels here for the Russell. We've erased, you know, the QE rise here past those levels. Again, Qs and SPYs look different. Qs and SPYs look different, but I think that's because of what it's made up of. Like Qs got to get to 240. They got another $50 to go to get to that area. Who knows? Maybe they go there. But I think that if we could get like a violent down move through IWM 170 relatively soon, like in the next 1 to 2 trading sessions, so that the market doesn't have time to let these moving averages catch up, then I think you gotta then look to honestly be aggressive You get aggressive on the buy at that point, and you buy probably pretty spread out is what you buy. You probably want to buy some of your FANG stocks. You probably want to buy some of your SHIT. I'm not allowed to curse on the VTF. I think it's okay if I spell it. Might not be okay if I spell it. Your garbage stocks, because those garbage stocks, if they want to give a bounce, they could give huge percentage bounces, and obviously you still maintain your strength, your XLE, your things like that, because then market's going to be a little less worried about the recession factor that could bring down those energy names. So I'm looking for it, but where's the signal? You know, I really thought that CPI number wasn't going to be that bad today, and I was like super pumped for a bullish game plan today. And then I think you guys saw when I was doing the morning meeting at 9, I was just like, okay, well now that didn't happen, what do we do? so I'm like, all right, what do we do? Probably just be super careful because we should go down a lot. So we'll see. Yeah, ARK, biggest volume in the history of the ETF, is interesting and notable. It's also, these things become cheaper. It's easier for them to do more volume. I mean, ARK's almost at the COVID low. This piece of garbage. Maybe that's what ARK needs, a flush to 33. What is this now? Wow. 1, 2, 3, 4, 5 massive days down with increasing volume and extension. Honestly, it's that setup is starting to come in. That setup is starting to come in. You might be able to look for an RDR tomorrow on this. Yeah, Gabriel, I'm sure that had an effect. That was my biggest fear coming into CPI was the increase in the China lockdowns. ARK Weekly. Bro, she's gotta say more prayers. Yeah, some of these charts are so, that's stuff it. Some of these charts are just so crazy right now. So crazy. All right, gang. All I'm gonna do here is just have my jaw dropped as I look at some of these charts like this. So I think I answered the questions, and we can wrap things up for the day. You know, the fact of the matter is, though, that these things never should have gotten to those prices to begin with. And we knew it. We knew it at the end of 2020. We knew it in the beginning of 2021. And like the pendulum swings, I feel like we're almost at the opposite side of the pendulum right now at this point. But the pendulum never should have gotten that far to the left to begin with. You know, these stocks never should have been at these prices. And that was the Fed mistake. The Fed mistake, I think, was that they just kept the QE going for too long. Not necessarily that they tightened or whatever. They just kept it going for too long. They kept it going well past we needed it. You know, they could have started to pull back. Hindsight's 2020. I'm not a Fed member, but I remember trading, and this is the weekly chart that's up now, and this coincided with that parabolic move that we already talked about in the SPYs at the end of August and beginning of September. This is when they should have pulled back on QE. You guys came in, you saved the day. We're making new all-time highs. Just pull. I'm not saying get rid of it. I'm not saying have it be zero. Just you don't need to have the pedal to the metal on the QE anymore at that point, because that's what created the bubble. Totally created the bubble. And now, honestly, the unsophisticated people, the memers and the Wall Street bettors and all that stuff, that's just your regular people with that regular money that were getting that government check. That money's all gone. And honestly, it was the Fed that created the environment that enabled people to start becoming gamblers with those stocks and YOLOing and everything else, that then has probably caused them to lose all their money. Because I've spoken to enough people who are interested in joining T3 or whatever, and were just in some of these things in the game. I remember speaking to one guy. I've spoken to a bunch of people who lost boatloads of money in these things. But I remember speaking to one guy, and he was just like, yeah, you know, like the way I manage risk and the way that I game plan is I got these stocks, like, oh man, I'm trying to remember which one it was. It wasn't Skills. It wasn't VRM. Man, it was one of these. One of these that's definitely like in the dollar range right now. It wasn't Root. It was one of these. It was like, yeah, you know, I just, when they take bigger dips, that's when I just buy more. And I don't use a stop loss. I was like, man, I just don't think that strategy is going to work for you if we start giving you prop leverage. And he didn't enjoy that I said that. But I was honest. I doubt he listened. But yeah, these things, this bubble never should have happened. Anyway, guys, I'm rambling, because there's plenty to ramble about. Yep. Well, the interesting thing that as we are starting to go into the balance sheet tightening that's supposed to start soon, is that I think it was somewhere in 2019, you can't see it based on this chart, but it was somewhere in 2019 that we reduced the Fed balance sheet by almost $1 trillion. I think we reduced it from like 4 trillion to 3 trillion, approximately. Now we're at what, 8, 9? I don't remember. So it's significantly more bloated. But it was done in a responsible way. You know, there was tightening going on here in 2019. We were reducing the Fed's balance sheet. We're letting things run off. It was done responsibly, and you can't even tell looking at the market. You know? So if they do it right, and they do it in the right environment, and, you know, you got general growth, and things are okay, and there's no pandemic or whatever, then you can reduce the market off the teat of the Fed, if you will, responsibly, and have it not really negatively impact things. But right now, you know, the Fed wants to bring inflation past 2% for a little while, just to help things out or whatever. And they sure got what they were looking for, and now they can't control it, and now it's, you know, not this gentle balance sheet reduction we had here. It is 50 basis points, 50 basis points, 50 basis points, 95 billion a month. Let's go. Yeah, perhaps, J. Cole. You know, I don't want to. I'm actually usually more of a defender of the Fed than anything else, though I do think that they've made mistakes. I still think that a mistake was back in 2013 that they weren't starting to raise. They should have been raising interest rates in 2013, and they didn't. You know, so I try not to be too critical of the Fed. It's a hard job. I think they're smart people. I think that they overall do a good job. I still fully support the Fed coming in and you know, supporting markets in the midst of this when it was happening. That was the right thing to do. You know, we would not have E-bottomed like that, that's for sure. But they're not perfect. Whatever. All right, gang, I'm gonna wrap it up. This is just one of the most interesting markets I've ever seen in the years that I've traded. So have a great evening, everybody, and I will talk to you all tomorrow morning. And I'm glad my technology is starting to fix itself. I need another screen. That's been my other problem right now, is I'm short a screen.